Okay, let me ask you something. What if your money could expire? Or what if every single transaction you ever made was visible to the government? Now, this isn't some sci-fi scenario. It's actually part of a massive global shift towards something called central bank digital currencies, or CBDCs. And believe me, they could change absolutely everything about the wallet on your phone. I mean, just think about it for a second. When was the last time you paid for, say, your groceries with a handful of actual cash? All around the world, physical money is just disappearing. It's being replaced by taps and swipes and clicks, and this whole shift is forcing governments and their central banks to ask a really, really big question. What comes next? So, how did we get to this point? Well, it wasn't just one single event. It was more like a series of shockwaves that really forced the world's financial leaders to completely rethink what money even is. It really kicked off with the 2008 financial crisis, which left central banks desperately searching for more powerful tools. Then, of course, Bitcoin arrived, proving that, hey, digital money without a government was actually possible. But the real wake-up call? That came in 2019 when Facebook unveiled Libra, its grand plan for a private global currency. Suddenly, the idea of a single corporation controlling money used by billions of people wasn't just theory, it was very real, and central banks realized they were seriously on the back foot. And so, what was their answer? The central bank digital currency. Now, I know it sounds super technical, but the core idea is actually both pretty simple and revolutionary. The key phrase you gotta focus on here is a direct liability of the central bank. So, think of it like this. The money in your bank account today, that's basically an IOU from a commercial bank, like Chase or Bank of America. A CBDC, on the other hand, is an IOU directly from the government. It's just as safe and official as the cash in your wallet, but it lives in a purely digital form. And what's so fascinating is how a CBDC kind of cherry-picks the best features from other types of money. See, it's digital, just like your bank deposit, but it's public money, like cash, because it's issued directly by the central bank. It's a real attempt to create the perfect hybrid. All the convenience of digital payments with the rock-solid safety of government backing. So why is this all happening with such incredible speed all across the globe? Well, it's not just one thing. It's really a perfect storm of different motivations. Get this, according to the Bank for International Settlements, which is kind of like the central bank for central banks, a whopping 86% of the world's central banks are already working on CBDCs. This is not some niche little experiment. It's a massive coordinated global shift. And their reasons are this interesting mix of offense and defense. On the offense, a CBDC could let them do things like send stimulus payments instantly and directly to citizens. And on the defense, it's a shield, right? It protects them from private currencies, from big tech, and it's a way to make sure everyone still has access to public money in a world where physical cash is just fading away. But building a whole new form of money isn't exactly easy. You have to make a few really critical design choices, and each one has huge consequences for our financial future. All right, the first and most fundamental question they have to answer is, who is this new digital money actually for? And the answer splits CBDCs into two very, very different camps. Okay, so a wholesale CBDC would basically just be a back-end upgrade for big banks to settle huge transactions with each other. It's interesting for sure, but it wouldn't change much for you and me. The real game changer is the retail CBDC. That's the one designed for the general public. This is the version that could one day end up in your digital wallet. Okay, so let's say we get a retail CBDC. Who's going to handle your account? Who do you actually call if a payment doesn't go through? This brings us to the next big design choice. In what's called a direct model, the central bank would pretty much become your new bank. They'd handle millions of customer accounts, which most people think is pretty unlikely. Instead, most central banks are leaning toward a hybrid model. In this setup, the central bank provides the core super safe CBDC, but your existing bank, or maybe a cool new fintech company, would manage your wallet and all the customer service. It blends public safety with private innovation. And this brings us to what is maybe the most fiercely debated question of them all. You see, cash is anonymous. Can digital central bank money ever offer that same level of privacy? So the choice here is basically between an account-based system, which is tied to your identity, I am me, therefore I own this money, and a token-based system where a secret key proves ownership, a lot like cryptocurrency. I know the password, therefore I own this money. But here's the catch, and it's a big one. Because of all the anti-money laundering laws, experts pretty much all agree that a truly anonymous CBDC is a non-starter. It's just not going to happen. Every digital transaction will leave a trace. So when you put all of these pieces together, you're not just looking at a new way to pay for things. No, you're looking at what could be the biggest shakeup to our entire financial system in a century. And this quote right here, it highlights the number one fear. See, right now, pulling all your money out of a bank is kind of difficult. But what if you could move your entire life savings from your commercial bank account to a perfectly safe government CBDC account with just the click of a button? In a crisis, that could trigger absolutely massive digital bank runs. This is the multi-trillion-dollar question, isn't it? A CBDC could become a direct competitor to the deposits at your local bank. Now, on one hand, this might force banks to offer you better services, higher interest rates, which would be great for us. But on the other hand, it could fundamentally threaten their entire business model. Honestly, economists are completely split on this. Some argue a CBDC will force banks to compete more, leading to a healthier system overall. Others are terrified it'll drain banks of their funding, crippling their ability to give out loans, and creating a system that's super vulnerable to these digital runs. The honest answer? No one really knows for sure how this will play out. So finally, let's just step back from how this all impacts the banks for a second. There are some really fundamental arguments that question the whole idea of a CBDC in the first place, focusing on the trade-offs it creates for all of us in society. Critics are asking, look, is this just a really expensive solution for problems we could fix with better regulation? A centralized ledger is basically a dream come true for mass surveillance and a giant, glowing target for hackers. But then there's the most controversial idea of all, programmability. This means the government could literally set rules on your money. Imagine getting a stimulus payment that just disappears if you don't spend it in 30 days, or money that simply can't be used to buy certain things. The potential for social control is immense. And that's really the bottom line here. The decision to create a digital dollar or a digital euro or a digital yen, it isn't really a technical one. It's a deeply political and social choice about privacy, freedom, and the entire relationship between us, the citizens, and the state. So as this global race for digital currency heats up, the question for all of us is, what do we want the future of our money to look like? Are we heading toward a future of ultimate convenience, where payments are seamless and public money is for everybody? Or are we building a system of ultimate control? That, right there, is the choice on the table.